Good morning and happy Friday, everyone. This is Steve Clemens, Vice President of Life Markets at URL. It is September, so it is Life Insurance Awareness Month, and I'm happy to be here on the first Friday of September talking with you all on Life Insurance Awareness Month. And as I do want to do quite a few of these first Friday webinars that we hold here at URL, I like to start things with this day in history. So I always look at what this day was in history. So this, in September 6th, the first one is near and dear to my heart because it was in 1991, the Soviet Union Balkan states, which are Lithuania, Latvia, and Estonia, were liberated on September 6, 1991 from the Soviet Union. And my mother was of Latvian descent. Was born in Latvia, and so always liked this day in September. Second one being a baseball fan, not quite a Baltimore Orioles fan, but a big admirer of the Iron Man, Cal Ripken. This day in 1995, he played his 2,131st consecutive game, surpassing the great record set by the great Lou Gehrig. So this day in history, the Balkan states were liberated from the Soviet Union, and the great Iron Man passed Lou Gehrig's record, which I don't think will ever be surpassed in baseball. Also, being Life Insurance Awareness Month, I like to throw out a couple fun facts on life insurance. And one of these is, really is what do all of these things have in common? Disney World, McDonald's, Pampered Chef, and Jim Harbaugh, who I'm not a fan of, being a Penn State alum and a big supporter of Penn State football. But I digress. All of these things have in common life insurance in the fact that in 1955, Disneyland and Walt Disney, he borrowed against his cash value in his life insurance policy to help finance the creation of Disneyland, buy the land and everything down in Orlando as we know it. And in 1961, Ray Kroc bought out his partners, the McDonald brothers, again, using cash value from his 2 life insurance policies to cover the salaries for key employees. And this one's pretty staggering to me. In 1980, Pampered Chef, owner, creator, Doris Christopher used a policy loan of $3,000 to start her Pampered Chef company, which was later purchased by Warren Buffett's Berkshire Hathaway for $1.5 billion. That's a lot of kitchen equipment, and a lot of it's cluttered in my kitchen, by the way. I'm trying to get rid of a lot of that, but good for Doris and creating a company and selling it for $1.5 billion, all started with a policy loan on her life insurance policy. And in 2016, the University of Michigan helped make Jim Harbaugh at the time one of the highest, if not the highest paid college football coach, with the help of using a split dollar life insurance policy. It is valued at, I believe, around $75 million, where Michigan was paying a 7-pay of about $2 million of a 7-pay cash accumulating policy. So Life Insurance Awareness Month. Obviously, we have a great opportunity if you're in the life insurance markets, which if you're on the call, you certainly are. 43% of American adults have no life insurance. And of the 57% who own life insurance, there's a good chunk that only have group life insurance, which is 18%. And again, 28%. Of individual only, and then a combination of the rest. Reasons for life insurance ownership year to date, and as I go through this is through the 2019 Life Insurance Barometer Study. We do have some handouts that kind of accompany this presentation within the toolbar of your presentation, so you can kind of download those within the next 20 minutes, half hour or so, and for some handouts for today's meeting. But reasons for ownership, kind of looking year to year, and this is comparing 2017 to 2019's barometer study. Income replacement is kind of the underlying largest region where we're seeing life insurance sales, that's generally, we'll see a lot of term life insurance for income replacement, for working adults, just trying to support their family. Mortgage protection is up there. But again, top two, income replacement and burial final expenses are the 1 and 2 kind of reasons, transferring wealth and then paying off a mortgage. What I do see here that is quite quite interesting is if you look at business purposes, there's a large growth in that area from 2017 to 19. So we're obviously doing something right in that respect. If we're seeing that much of a growth for protecting small business owners with buy-sell agreements and buy-sell policies to fund those buy-sell agreements for business continuation, for key person policies, ensuring the lives of the key employees within the business. So that created a huge jump within the last 2 years. So if you work in the small business market or large business market, working with business owners, if you do need help and support with key person, buy-sell, URL here would be happy to help you with those cases and giving you the support needed on those business life insurance cases. So looking at income replacement, it is football season. So I have a picture of Drew Brees here. He is age 40, but we're going to call him a top salesman at his company, a preferred health with probably a little smaller salary than he's used to, and then $84,000 a year, $7,000 a month, married with 4 kids, ages 10 to 5, which is him. So we're looking at income replacement. We're looking at this guy, Drew, and we're looking at replacing his income. He needs life insurance, maybe only has a small policy through his employer. Normally when we get these quotes in here at URL, it's generally just spreadsheeting different terms that are requested. So for a guy like this, we'll normally see $500,000, $750,000, $1 million, and we're looking, he's 40 years old. We're looking at 25 years covering him till retirement. And that's certainly fine. That's kind of scratching the surface with him, but it definitely helps if we go a step further and maybe dig into what he really needs and talk to our clients a little bit more about getting into a little bit more conversation than just spreadsheeting term. So what we provided as 2 of the handouts here on this presentation is our Life Choices handout, which is there, which has an income protection grid, as well as a needs analysis piece. And I generally, when working with personal clients, like to go through a needs analysis or an income replacement grid to kind of show them the need, because many times they're coming to you because they need the help and they need your advice as their life insurance advisor. So an income protection grid is a great tool and resource to use. So we're like, well, we'll see maybe what's affordable, great, but the income replacement grid here is going to show you at a $7,000 monthly income, and you need to protect 25 years of income, we're at $1.3 million of coverage needed, as a base need. So that gives us a real number from our Life Choices life insurance planning guide. And if you take the normal spreadsheet quotes, we're seeing again $500,000, $750,000, and $1 million. So this is already showing us that we're undercutting our client and what the protection that they need. So now when we go and spreadsheet the proper amount based on that, obviously it's going to cost a little more, but you're providing your client a better service and a protection that he and his family needs. Now, if we're going to take it a step further, I like to use a needs analysis worksheet, which we have provided again on this sheet. So when we do that and calculate that, one thing that wasn't being calculated was, the 4 kids, the college funding, those things. So this really drills it down to a real need based on what they're telling us. So we need to cover those final expenses, those outstanding debts, the mortgage, the college funding, if that's something that they would like to help take care of for their kids. God forbid this Drew passes away, he's got that covered. Obviously replace the income, and you calculate it all up from the needs analysis worksheet. We're just a little over 2.1, almost $2.2 million of need. So again, we've gone from $500,750 to $1 million up to 1.3. Now we really drilled into his his finance a little bit, what he needs for mortgage protection, for college planning, for other needs, and we're at a nearly 2.2 million. And I will say you can use the needs analysis in a couple ways. We have the paper form and an electronic form. We use the one through Life Happens, lifehappens.org, and the Life organization. It is not, I always like to say it's non-denominational. It's not Prudential, John Hancock, Lincoln, or some other company. It's through a nonprofit. So, it puts us at ease. We're not just promoting one company out there. It's a nonprofit that puts the needs analysis out and gives us a real number. So we have the worksheet, which you can download also on URL's website. In our Life Markets area, we have the calculator online as well. So using the needs analysis, if he were to go for 2.2 million for 25 years, now the premium's up to about $2,400 a year, or just around $200 a month at a preferred rating with the top 3 carriers as of today. So, we're looking at, we went from $500,000 to $1 million up to 1.3 to 2.2 based on this client's needs. And obviously, that at least gives him peace of mind. It gives Drew here peace of mind of what he truly needs. And then, if he's willing to build that into his budget and build $200 a month into his budget, that's great. Then he's fully insured for what his need is. Now, we can get creative in the design as well and say, well, yes, he needs 2.2 million, but in 25 years, maybe that need isn't quite that much. Maybe because now the 4 kids are aging out of the house, they've started families of their own, etc. So you can get creative with the coverage and ladder it. So you might want to do 15 years at 600,000. Then after 15, that drops off because at that point the majority of his kids are out of college, out of the house, and now you have coverage for another 5 years at 600,000, and that will drop off, and the final $1 million will be in for the last 5 years. So you can ladder it between one company. You can ladder it between multiple companies. Banner Life actually can ladder the coverage all in one policy with one policy fee instead of 3, which will save even on these premiums. And that's a pretty cool design because it happens automatically, all in one, and it's all in one portfolio. So that's something I would certainly, in Life Insurance Awareness Month, kind of get in the habit of doing, maybe pulling out that needs analysis a little more and taking a few extra minutes on the life insurance with the client, because it may pay dividends even if your market is not truly life insurance, but it's maybe group benefits or property and casualty. Going the extra mile with your clients will certainly help on all lines of business you do with them. So kind of getting back into some of the statistics for 2019, appealing product features. This is what consumers are kind of looking at, what is most appealing with product features. So they have some ones like wellness data, taking health courses, annual health screenings. But the 2 big ones you'll see that are most attractive with clients are the living benefits on life insurance, like a long-term care feature or chronic illness feature, and a critical illness feature. Those are the ones that most clients, when talking about additional benefits, are the most attractive. The annual health screening, I think that what we've seen and what the statistics are showing is that is more something that more of the millennial generation is more, used to or interested in as compared to Gen X, baby boomer, etc. So the millennials, I think, maybe with some of the new just kind of getting used to that annual health screening with maybe some health insurance planning, other things, they're kind of used to that. However, and not many of the companies have kind of gone that direction. John Hancock has their Vitality program that we have available for that. But what we see agents asking us and what we've been marketing more of that has been getting a lot of traction again is the living benefits like critical illness and chronic illness or long-term care on a life insurance platform. So living benefits on life, I mean, here's just a list of a few companies that have either one of those combinations of critical illness and chronic illness, one or the other. And there's more out there, but there's plenty of companies here at URL that have those. On term, you know, we have Emeritus, Transamerica, Foresters, Royal Neighbors, North American, American National, American Amicable, all with term with all three living benefits. Some of the carriers may only have a LTC or chronic illness living benefit on permanent, but either way, those are extremely beneficial benefits, and they're things that clients really like to hear about. So obviously, it's not in the forefront of marketing out there to the consumer, so it is really our job to educate our clients on the additional benefits that are now available on their policies. If you are doing annual reviews or reviews every so many years on your clients' existing life insurance, doing checkups on them, it's great to tell them about these additional benefits that weren't available when they originally took their policy. There might be a benefit that will be useful for them and maybe have them look at some additional coverage. So reasons for purchasing linked benefit life products, you know, what we're seeing is, the long-term care costs may deplete their savings. Benefits will be paid in a lifetime. Definitely a more economical use of current assets. Clients will say that long-term care is expensive. They can't afford two separate policies, so combining them into one is something that is attractive to many consumers. And those are some of the key reasons there that we're seeing reasons for the linked benefit products. Simplicity. Clients like having that ability to have it in one package. And when we're looking at long-term care needs for clients, we'll look at standalone as compared to a linked benefit. And then I definitely agree with put both options in front of the client. Talk to them, say, here's the standalone, here's a linked benefit option. It's also good to find out more. Again, do a review of their life insurance policy. They may have an old whole life policy with accumulation or an old UL policy with accumulation that they can roll into a new plan, combine the two, and provide those needs. So this was an interesting statistic as well. Premium reduction versus cash value increase. If presented, clients really like the idea of premium reduction and cost savings, more so than a cash value increase. And then obviously there's a percentage that just don't know, just not really familiar with either. But both are obviously relevant. Cash value increasing is fantastic through either a whole life chassis or universal equity index universal options where they can build accumulation. Premium reduction, one of those cost savings ways we look at is return of premium term in the right pocket of age. Return of premium term, I would say from still in your 40s and younger is a very strong option. Then when we get into the 50s, then there's some return of premium guaranteed UL options that are maybe a little bit more attractive. But looking at a sample client on this kind of premium reduction type program, look at return of premium. If this client has a $500,000 need for 30 years for mortgage protection, income replacement, et cetera, what we see here, if we were looking at a term, a return of premium term, a universal or a whole life, return of premium term kind of fits a premium kind of right in the middle. Something that is obviously going to be more expensive than term, but is going to be less expensive than a full $500,000 UL or whole life. So if we were spreadsheeting term, for this person, you're looking at about $60 a month on a 30-year level term. On a return of premium, a little more than double, $144 a month. And then going to a guaranteed UL that's not really building cash accumulation, you're at $254 a month. And then on a non-participating whole life, you're at $474 a month for the same individual. If you go to a dividend participating whole life, a little more expensive than that. So when kind of looking at those options, a lot of people kind of generate and go to the middle. There's still some cash benefits and some nice benefits on return of premium term. So at the term, the only option, there's no real cost savings down the road. It's just, yes, you can convert. You have that convertibility privilege until age 65 or 70, depending on the company. But with return of premium, you have that. You have cash value. You have a paid up life insurance option, which is cost savings down the road on a 30-year term that generally starts around year 7. A full cash refund, or the paid up life insurance option. So, or a combination of both. So a client can take a full refund and get all of their money back. They can opt to have a paid up life insurance policy with no more premiums down the road, or they can roll that cash into a conversion UL, or they can do a combination of cash back and paid up life policy. So the nice thing with return of premium is when you look at the illustration, it's all guaranteed. It is, here's the percentage you're going to get back on a 30-year plan in year 10, in year 15, in year 20, year 25, and year 30. Year 30, it's 100% of what you put in. But, oh, by the way, you can also choose your paid up life insurance option. If you choose not to take the $51,000 and change, we're going to provide you $91,000, no more premiums. You're age 70, you need the coverage for final expense needs, and now you have it. So great benefit, something certainly when you're looking at clients in their 30s and 40s looking at term, return of premium term is a nice option to look at. It is going to be more expensive, but a lot of clients will certainly show interest in it, and we see quite a few opting for that option over just paying for peace of mind for 30 years and not having anything to show for it at the end. And then always the huge argument on return of premium term is, well, what if I invested the difference that I would pay into that return of premium? It's certainly an option, and you can certainly potentially do better, but the guarantee would be 3.84% after tax with those additional dollars on this 40-year-old preferred male. So that's in the illustration as well. That's a pretty good guarantee. Obviously, if you put it in the market or somewhere else, you can certainly do better potentially, but there's no shame in 3.84 guaranteed after tax. And then I look at this. Okay, so if you needed that $91,000, that's the paid up option at the end at age 70, well, that's going to cost this client nearly $4,000 a year at age 70. So you're living 10 years, you paid $38,000 of extra premium for a $70,000 or a $91,000 policy. And then again, if they live another 20 years to age 90, they've paid in nearly $80,000 for that $91,000 policy. So to have that paid up option on the end is a really valuable benefit. So with some additional statistics here, financial impact of loss, almost half of the respondents would feel financial adversity from the loss of a primary wage earner in just 6 months, and more than a third would feel adversity in a month or less. So if the primary wage earner passed away in a family, here's the statistics that are showing how long it's going to take before there's financial strain in that family. So again, looking at life insurance, and planning. It's definitely a need there that these clients are going to have, because half of those surveyed are going to feel financial adversity in just 6 months of the death of a primary wage earner, and a third in a month or less. So that's a pretty big number out there. And the reason why, when we're meeting with our clients, whether it's initially for life or other reasons, certainly we have to take that into consideration. All right. Another piece that the 2019 barometer study was getting into is consumers using social media for researching financial professionals. So you'll notice the largest group obviously utilizing it is millennials. Over half of them are looking at social media and looking at your social media before making a decision on if I'm going to go with this person or somebody else. The Gen Xers a little less, and the baby boomers a little less, but that number is growing on the baby boomers. So Facebook is certainly a tool that they like to use, probably even more than the millennials. Millennials are more looking at LinkedIn, Instagram, other areas like that, where the baby boomers are primarily looking at Facebook and making sure that their life insurance advisor, or their casualty advisor, or their financial planner, what they're posting and what they're doing. So be aware that, if you're throwing it out there on social media, be socially responsible. So what do they want to see on social platforms? What's most valuable, and what do they find value in? Well, hints that explains how to save money is a big one. Comments from other people, statistics that make them look at a specific situation differently, a definition or explanation of an industry term. Obviously life insurance isn't something people are studying day to day. So, the little things on life insurance, tax-free death benefit. Many clients don't know that. So, just little things, a definition on what term life insurance or permanent life insurance is, goes a long way. Quotes from someone who's lived through a unique or specific experience. So these are all things that clients see value in terms of what you're posting on social media. So at URL, we provide some content for you that's kind of plug and play content that you can throw on social media. You can throw out there on Facebook. You can throw out there on LinkedIn. If you're doing Twitter as well, Instagram, these are all available for you to use, using a lot of those same statistics, hints, definitions, maybe looking at something differently. I did go to Starbucks this morning and get a latte, which was about $4 a day, and life insurance is about $1 a day. So, those are little things I think consumers can look at. There's a quote from clients where life insurance impacted their life. So these are all things that are available, content that's available, that we at URL help make available through the Life Happens organization. You can certainly go to lifehappens.org on your own and get a lot of that content, but we try to give you some that we've kind of handpicked and cherry-picked out there that we thought was pretty good content. And again, another handout we provided is a whole social media platform that you can do on a daily basis if you care to get out awareness on life insurance through this. So one of the handouts is this. It's a booklet. It's actually of mid-August through the entire month of September of content you can use and put on your social media platforms. So definitely take a look at that. And obviously, you can utilize it. You don't have to do it on each of these days, but certainly it provides you, an outline of what you can do and put out there for social media content. And it's all quality content. And if you wanted to find some more of this information on our website at URL, you go to our Aries Insurance Agent Services platform. When you go to URL, URL's website, which is url.insgroup.com/Aries. You go into the Department tab, down to the Life Markets tab, and then the Life Insurance Awareness Month link. We have videos and some of those same social media pieces that you can utilize on the Life Insurance Awareness Month link there. Additional training we're doing here at URL in the Life Markets Department. Coming up, we have our Life Insurance Awareness Month speaker series. We have on September 16th. We have our VP of Sales with Foresters coming in for a lunch and learn from 10:30 till noon. Foresters, for those of you who are not aware of Foresters, they're about a 150-year-old company, fraternal life insurance company with some incredible member benefits. Great term product, simplified issue up to $400,000. If you wanted medical underwriting preferred rates, it starts at $100,000. Living benefits on their term, chronic, critical, and terminal. Current assumption UL, a dividend paying whole life, and a final expense policy. So a very well-rounded carrier for middle market America. Very good. Some great content will be shared on that meeting. And then on September 17th, the next day, same time, we have Rob Bish, our VP of Sales at Pacific Life, coming in for lunch and learn, talking a little bit about product at Pacific Life, primarily competitive term guarantee UL with chronic illness benefit, and a life insurance policy review, annual review piece, and sales and marketing strategies for reviewing life insurance with your existing and new clients. So those are coming up in about a week and a half. And we hope to see some of you there who are local. It'll be right here at our office at URL in Harrisburg. Rewards, we have our President's Club meeting coming up in March for our top 40 broker partners in Charleston, South Carolina. For new producers at URL, we have a quick start bonus. And that's a per case bonus in the first 90 days you're with URL. And then for our Gemini partner agents, we have every quarter we have a bonus in 2019, which can range from $100 to $2,000 per application on life, and disability $50 to $100 per application. And that concludes the recorded piece of the meeting today. If anybody does have any questions, please let us know. But before you go, certainly check out our 5 handouts that we have. Download those, some great content, a needs analysis piece, a life choices, also our life choices piece, which is also a good indicator for life insurance amounts for your clients. And then the Life Insurance Awareness Month social media calendar, marketing tactics for Life Insurance Awareness Month, and a 1-page sheet on our Life Markets team here at URL. Thanks again for joining me this morning, and I will open it up to any questions if there are any, and if not, I hope you have a great weekend and look forward to helping you with your life cases in the near future.